Sorta. Today is the day after Liberation Day, or Liquidation Day, April 3rd, 2025. Someone please tell me this whole thing's an April Fool's joke. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is very similar to yesterday. I'm no longer in my Palantir short. Okay, let's talk about it. We're 50 cents off of where we closed, but including that, we're down 4.8%. So a solid 5% down day for the S&P. The S&P falls the most since June of 2020 during the heart of a global lockdown from a virus that put the economy to a standstill. Qs are down 5.4%. The IWM is down 6.5%. TLT did finish up, but off of its highs. The dollar finished down 1.75%, but off of its lows. What did oil end up doing? Oil finished down 7%. Those oil names got crushed today. So like I was saying, anything that has a read-through to like weaker economy, like a recessionary economy, think energy, think advertising spending names got absolutely wrecked. Meta down 9% as an advertising name, Snap down over 10%, the Trade Desk down 13%. Those names all got absolutely hammered. Apple did go circuit broken. I was wondering if it was going to clip that 10%, so apparently it did. Apple closed down 9.25%, because it's really bad for the bottom line of Apple if they have to produce their phones in America, or if all Americans just have to pay significantly higher prices on them for tariff reasons. So Apple got absolutely destroyed. The MAGS ETF, I only ever heard of this a few trading sessions ago. Someone brought it to my attention. MAGS ETF closed down 6.7%. Energy stocks, XLE is off 7.75%. Just brutal candle on the XLE. Absolutely brutal candle on the XLE. That $92 is a huge support level. They gapped at $2 below that and just destroyed it. OIH, the oil services names, even worse. Oil services names down 11%. Tate wants me to bring up SOX L. I feel like that's not fair because it's a 3x leveraged ETF. But fine. SOX L down 30%. SMH down almost 9% if we want to look at SMH instead. It's probably a little bit more fair. NVIDIA off 8%. AMD off 9.25%. Oh, Micron got slaughtered, right? Micron off 16%. Forget about it. Oh, did Micron finally break that support? It did. Remember, I've been talking about this range in Micron that it's been in since August of last year with this huge support level at 85. No more. It's gone. It's broken. Sayonara. Yeah, I think you guys get the point. Pretty much everything got wrecked. Alibaba down 0.5% though. So maybe not everything. FXI down 0.9%. Okay. Europe, this FEZ down 1.7%. Not good. 1.7% is not good, but still half the loss of the U.S. markets. So other markets outside of America generally continue to be more of a safe haven to be involved in. Gold finished down 0.5%. Gold at one point, gold was crazy today. They gapped it down really big at one point, bought it all the way back up to green. That was pretty wild. That was pretty wild to see. So they are still buying gold. And TLT was off its highs, but still finished up 0.75%. Yeah, Intel's green. There's one for you. Intel's green. I think it had some news today. So yeah, I mean, again, it's an absolute bloodbath because tariffs create high inflation and low growth, and the tariff announcement was Mexico's up. That's true. The tariff announcement outside of, I guess, Mexico, Canada, and Russia was worse than expected, pretty much across the board. I mean, it was beyond what was feared, and remember what we saw. In an alternate universe, the market could have squeezed higher today. Remember this initial pump when everyone thought off that Wall Street Journal article that tariffs were only going to be 10% across the board? And then we saw the 40, 50, 60% tariffs hit for certain countries and 36% or whatever for Europe. 10% tariffs across the board sounds pretty good right now, doesn't it? Maybe we negotiate our way down there. It's very, very, very easy to be super negative right now for a lot of reasons. And the fact of the matter is, if we got the 10% number, if that's what came through, the market would have ripped higher, and I would have thought that would be a bigger picture thing just to sell into, because you're still going to get an eventual read through that'll be lower growth and higher inflation on the economy, and that's at a time when the S&P is a little bit expensive still. So we probably would have gotten a really big rip. It would have been something that I would have liked to have sold into, but we didn't get 10% tariffs. We got worse than expected, worse than feared, and just destroyed the market. I mean, there's a lot of notes out there, like that one Goldman note that we referenced this morning. I had copied it in there that just said this is so much worse than expectations, and those Russian numbers alone, basically, I mean, not Russia, China numbers alone will probably create like a global recession, reading between the lines on the numbers. So, yeah, I mean, it's really bad, really, really bad. But let's talk about where we are, all right? So, worst day since 2020. The SPYs here are trading $21 or so extended from the ADMA on the daily. Into the close, I was running a little bit of a comparison, and we can do it again now with the periods of largest extension in the entirety of the 2022 bear market, which were basically in January and February of 2022. The February one basically being the Russian invasion of Ukraine. So looking at the SPYs, I usually make this comparison with the Qs, but the SPYs here on February 24th were $23 or so extended to the downside. And keep in mind, that's the day of the invasion, and we opened up at that price, and we immediately got bought back up. So we closed today at $21 of extension. Here's $23 of extension. Yes, the S&P trades at a little bit of a higher price now, so it's not quite apples to apples on a percentage basis, but it's fairly close. And then the other really big one was back here off the initial sell-off in 2022. We got to $30 of downside extension, but again, that was an absolute low on that tail. So just comparing some of the most extreme points of downside extension, which those were all multi-day moves to get there, by the way. This was a single-day gap down and sell-off that got us there. But we're $21 extended to the downside for the SPYs. We are $21 or so extended to the downside on the Qs. So pretty much the same. A lot of times the Qs are ahead of the SPYs in that regard. So let me try to be positive. We can talk about both sides. Let me try to be positive first. So the event now is behind us. All right, everyone knows what these numbers are. The numbers are really, really bad. The tariff numbers, that is. We gapped down huge on it. We had our biggest down day since 2020, but now everyone knows what they are. There's some headlines that are coming out that saying basically that some of these numbers are basically not up for negotiation from Trump or the administration. I don't buy that. I think that they are, and I think that them actually postponing the start of the retaliatory tariff aspect of it till April 9th, which is a week from yesterday. Why? Right? Why wait? Why wait the week? Like the 10% number starts immediately, but for the retaliation number, the 9th, a week. Why wait? The only reason that there is to wait is to negotiate, to allow people to concede or whatever to negotiate. So one of two things can happen with the countries that we have applied these tariffs on. They can negotiate or they can retaliate. It sounds like Europe is more focused on retaliation. That sucks. But a lot of other countries, it sounds there, might be more focused on negotiation. I think we saw it out of, what was it, Malaysia this morning, already said that they're ready to negotiate. We've already seen from India, like a week ago, that they are basically ready to negotiate. There's going to be a lot of countries out there that are ready to negotiate. We saw a headline come out that the read-through on this thing was very positive. I think the Trump administration came out and said that they'll lower the China tariffs if they reduce fentanyl. Fentanyl is definitely not an area that I'm very knowledgeable about at all, outside of the fact that I know like a grain of sand worth can kill you. So it's a terrible, terrible drug. But to me, that seems like kind of an easy one. And I feel like China might come to the table to negotiate a bit. And again, that seems like an easy one. So we have a week here before that these actually get put on. And I don't see why he even would have done the week. Why not have it start immediately unless you want to give that week to create opportunities for countries to negotiate? And I would assume that anyone that negotiates, whoever negotiates first, let's say, some of the first countries that negotiate versus the countries that retaliate, maybe the first people to negotiate actually get really good deals because, and again, this is me with my positive silver lining hat on right now, they get really good deals, and then the administration uses that as an example to the countries that want to retaliate and say, hey, look at what XYZ country did. They said that they're willing to negotiate. They got rid of their tariffs. We got rid of ours. And now we're all the way down to where they were originally or lower than they were originally or something like that. You could do that too. And, maybe the worst of the worst now is to some degree in the price. And from here we can err towards the side of getting positive news that hits that could benefit us and get us back up. That's me with my positive hat on, my silver lining hat on. Canada and Mexico probably are like two most important trading partners, right? Canada, Mexico, and I guess throw China in there. Little bit of a silver lining that they weren't on the list as well, right? Though we did see Canada come back and say that they're going to do 25% on some cars or whatever. That kind of seems like a little bit of a positive also. So, those are the positives, is that we're looking at a market that is at a massive degree of downside extension where at this point there is room for improvement on the news. If we're going to look at the downsides, well, the downsides are that there is more retaliation than there is negotiation, which we're potentially already seeing from Europe. And a potential downside, though I don't believe them, is where the administration is coming out and saying that they're basically not willing to negotiate. This is just where we're at. If that's the case, like if those numbers that are established yesterday and probably has to do with something with today's additional sell-off even after the gap down, if the numbers that got said yesterday stay in place for the next, 4 years, let's just say, we're nowhere near a bottom. Maybe we'll get a bounce at a certain point, but we're nowhere near a bottom. The other part of the negative side is originally even on the 10% tariff number, when it looked like we were popping immediately after hours, I do think that we would have actually gotten a really big pop. I think we would have gotten follow through today. I think that we could have seen easily well above SPY 480. What were we at even on just on the move after hours? How high did we get? We were like up there, weren't we? We were probably gone significantly higher. Probably would have been to like SPY 500. Yeah, we got to 470 about. If they did the 10% tariff number, we probably would have gone to 480, 580, 590 today, maybe, who knows. But eventually I think that would have been sold into as well, because it still would lead to lower growth and higher inflation in the long run. So, the negative side of things is, no matter what happens at this point, almost no matter where we negotiate to, there's going to end up being a read-through into the economic numbers that ends up being slower economic growth and higher inflation at some point in the future. So I think you could pretty much kiss all-time highs goodbye for a long time at this point, unless some sort of real miracle happens. Corporate taxes go to zero. I don't know. Would that even do it at this point? Because if you put corporate taxes to zero, but the economy's at a standstill, what's going to happen? I don't know. So that's it. I have a trading rule for myself. Every once in a while, it hurts me. Today, it hurt me. More times than not, it saves me money. In the long run, it saves me money. I don't sell into extreme downside extension. So I got smoked today. I definitely got caught a little bit with this. I thought that there was... I genuinely thought that the Trump administration was going to come out with a number, because remember we were seeing those like 3 different potential options on how they might do it. I thought that they were going to come out with numbers that were not as bad as feared, that were, maybe that 10% across the board number, and then they could take a victory lap. Imagine, I know Trump came out today and said that the stock market's doing great and it looks fine, even though it just had its worst day since 2020. But imagine the victory lap that he kind of could have taken if he just chose to do 10% tariffs and the market actually went up. I would still argue that he's wrong, but the market would have gone up, and he could have pointed to it and said, look, I told everyone tariffs are a good thing. Look, I just announced 10% tariffs across the board. It's a fourfold increase from where we were, and the market just went up on it. I told you guys had nothing to worry about. This is all part of my master plan. He could have taken a huge victory lap on that. I kind of agree with you, Tate, but, in the eyes of his supporters and evidence of the market going up after that announcement, it could have been a big victory lap. So I thought that that's what he was kind of setting himself up for. And then, like, we're looking at that Charlie McElligott note yesterday that indicated that no one is prepared for market upside. So you really could have triggered a big squeeze to the upside on an announcement that wasn't as bad as feared. And it kind of, in some ways would have been a win-win for everybody, though in the long run it still would lead to slower economic growth and higher inflation. At least in the short run, it would have seemed like a win-win for everybody. The stock market participants get a little bit of relief because we're moving higher. Trump gets to take a little bit of a victory lap and gets to get his tariffs done, and we get to kind of move on with our lives. But while I genuinely thought that was going to happen, it did not. That's what I was prepared for from a positioning perspective. And since it didn't happen, and I was prepared for the move higher, even though I had a little bit on the short side, I got absolutely smoked. But I don't sell into extreme downside extension. I just don't. I take the pain. I'll manage the positions. And then when the market is no longer extremely extended, whether that happens through time or price, we've gone through these exercises in a lot of afternoon meetings in the past, I will work out of those positions and potentially size down. But for the moment, for the day, today was just really, really painful. It might have been the worst day I've ever had in my career, actually. Certainly up there as one of the worst, if not the worst. Just an absolute bloodbath. But, it is what it is. It's part of the business. We just need to roll it all off our shoulders and come back the next day and just make sure to continue doing the right things over time that make us money in the long run. And I am a firm believer in my edge that is based on trading rules, and I follow those rules whether it means more pain or not, because I know in the long run that's what pays me. So yeah, I mean that's pretty much all I got. I really don't feel any real need to go into any specifics of any individual stocks today, outside of the percentages that I went over in the beginning. Um, the market itself, slaughtered to the European close. We got a nice bounce and then closed on lows. Another potential part of the negative side that I meant to say before when I was talking with my negative hat on is just the potential of just further de-risking and deleveraging. That's what today's selling sounded like. Today was a brutal day. We never got a capitulation bottom. We never got any sort of real appreciable bounce back. And I just think if you look at the technicals here, it's a breakaway gap to the downside. Anybody that was long from good prices in March, like we were, right? Remember us buying around March 13th around the absolute low, capturing this move. I remember we were buyers on Monday into the day 4 gap down and caught this move. Anybody that was still holding long positions, I have my hand raised, from these lows just got burnt up today. So that leads to just a lot of selling. And again, if you're a fund manager right now, you're just looking forward at slower. I mean, it was just one sell side bank after the next, just letting us know, hey, guess what? This means slower growth and higher inflation. And now that we have the realization of the data and it came out worse than expected, the tariff data that is, then it is just an opportunity to deleverage. And that may have to continue tomorrow. And today, we probably didn't see the margin calls because yesterday was a positive day where we closed at highs. The margin calls are going to hit tomorrow from the people who got absolutely burned. So there's a reason why we do like day counting sometimes in down moves and up moves. And it's because, well, there's a good chance that today being a day 1 leads to a feedback cycle of selling into a day 2. Maybe that gets counterbalanced by some buying of natural buyers that just come into these large extension moves, but we'll see. And tomorrow on top of that's a Friday. Tomorrow on top of that we have a huge coin toss of an unemployment number where your guy's guess is as good as mine. If that unemployment number, so we're in a situation now with these economic numbers, with employment numbers, where good news is good news and bad news is bad news. So if we get a good number, it could really help to give us some relief off this massive downside extension. We get a bad number that's not even showing the repercussions of these tariffs on the economy yet. Oh man, this could be really something special. This could be really something special. I almost want to say in line with the way like a COVID style sell off, but the difference on a COVID style sell off is that, I mean, one is the cause and two I think is the length of it. With the COVID sell off, we got that huge Fed supportive pivot that kind of came in, and then eventually we got an economy that was able to reopen. I think that the Fed here is still going to be very slow to act until they see inflation really coming down because of growth coming down actually in the numbers. And honestly, I know that the Fed is supposed to be impartial towards politics, and overall Jerome Powell does a good job of it. But I don't know, just the way that Donald Trump has treated Jerome Powell in the past, I don't see him being in any rush to come in and save the guy. So we'll see if that ends up playing out. But the employment number, I think, is a good news is good news, bad news is bad news situation, and it could really help give us a relief rally off this massive extension, or it could just lead to, oh my God, the economy is slowing and we haven't even really seen the result of these tariffs yet in the economic numbers. Sell, sell, sell. Get me out of this as we work our way towards a true bear market. Right now we're like in a bear market of stocks, but we're not in a bear market for the actual market. Many stocks are down 20%. The IWM is down 20%. I'm not sure where the SPYs are at, 13% or so at this point. It feels like more now. but we're not technically in a bear market right now. So that's all I got. Happy to turn it over to you guys for any questions. Let me scroll up in the VTF and see if I missed anything. From Pete, trade data paints a more complicated picture. The value of U.S. trade with Russia has fallen to its lowest level in decades following the invasion. I mean, that makes sense. We sanctioned the hell out of them. But last year, Russia still exported $3 billion worth of goods to the United States, according to U.S. trade figures, mostly fertilizer and platinum. That's interesting. That figure is significantly higher than the value of U.S. imports and some smaller countries that Mr. Trump targeted, such as Laos and Fiji. What about the country that we're targeting that's just an island where only penguins live on it? Got it. Carvana thoughts is the next question. Yeah, I don't know. It's so dependent on the market. You know, I don't have any. I really don't have any specific individual stock thoughts too much right now, because I don't have the certainty about the market. I just kind of painted the bull case and the bear case on things, and we got this unemployment number tomorrow. Show me which one plays out. Do we get some market stabilization? Do we get time or price correction of this extension? Then I would have one thought process for you on Carvana. Do we get panic selling because of a bad employment number tomorrow that leads to further downside? Then I have another thought process on Carvana. 162 is a huge level, which we're $20 away from. He went golfing today. It's cool. From Penny, the hard part of analyzing the various paths forward is that none of these decisions he's making are rational, so no amount of rational analysis is going to make the outcomes more predictable for us. Yeah, I guess so. I guess maybe that was my fault in how I positioned myself into yesterday, was that I thought that he might make a decision that would be more rational, which is the one that I kind of painted the picture of, but that's not what he did. From Eli, does it put you in a position to have to just trade around it until you can see some relief? And when do you know your idea has been invalidated in that situation? I mean, I would say that my idea already has been invalidated, but like I said, I have a rule where I don't sell into extreme extension, so it's just a matter of kind of trading around the position and managing the position and seeing how the extension plays out, and then reassessing when the market's no longer extended on just how much risk I want to take off and how much of a hit my account took. Thank you, Rich. Rich N, that is, and other Rich, thank you too. Why not? Market doesn't bottom on a Friday. From Jerry C. Pending any game-changing news coming out of the White House, do you think we should only be thinking like a bear? I am in the camp with the idea of earnings coming very soon, and I cannot imagine guidance being positive from anyone regardless of Q1 2025 results. Then identify who specifically will benefit from the tariffs. Yeah, so this is going to be a really, really interesting earnings season, because pretty much on the last earnings season, very, very few companies were willing to really talk about tariffs at that point or put tariffs into their forward guidance. A few did, but most did not, because there was too much uncertainty around it. This is going to be the earnings season where everyone's forward guidance is going to have to, I mean, every single earnings call that happens for every company in the S&P 500 is probably going to be mentioning tariffs at this point. And it's going to obviously have a huge impact on forward guidance. So yeah, I mean, look, I would argue that I've already been thinking like a bear, but I don't think, look, we're tactical traders. As tactical traders, if you're a bear, it doesn't mean that you sell at any price. If you're a bull, it doesn't mean that you buy at any price. Trading rules are important. 99 times out of 100, I'm making that number up, but it's probably accurate. 99 times out of 100, if the market is $20 extended from the ADMA on the daily and you short sell it, you're going to get smoked. Maybe one time out of 100 on a special situation, maybe this is one of those special situations, you can short a market that's $20 extended from the ADMA and make money. but 99 times out of 100 you can't. And that's why I have that rule in place where I don't sell into extreme downside extension. Because like I said, there have been a couple times over the years, and honestly today was one of them. I could have bailed out on some positions earlier. There's been a couple times over the years where that rule has hurt me, but the vast majority of the time, that rule has made and saved me boatloads of P&L. So yeah, I think that we should be thinking like bears until, I don't know, all the negotiations happen and things look great or something, and then corporate tariffs are at 0%. Then maybe we can change our thought process. It makes sense to be thinking like a bear, but if you're thinking like a bear, you're not shorting at $20 of extension. If you want to just be technical about it, and obviously this was hard because we had such a big event yesterday, where you want to be selling is yesterday's high area. That's a third day on a bounce back into the equilibrium area. This is where you want to start looking for your pivot high for continuation lower. Very similar to this pivot high here that we said should overshoot a little bit to the upside, which it did before we pull back to get continuation of the downtrend. So for sure, I agree with you, but it just, my experience says it does not pay to chase markets ever. And if you're shorting $20+ of extension on the downside in the SPYs and Qs, you're chasing, and that doesn't pay. 99 out of 100 times or so or whatever. And for me, that number is more than enough for me to not really do it the other way. From Tate, what if China and Russia approach our trade partners and say, you can't trust the U.S., come make a deal with us instead, and you won't have to deal with American uncertainty? I mean, I would argue that's already happening, right? I mean, I don't know about the Russian side of it, but on the China side of it, we just saw that headline a few trading sessions ago that South Korea, Japan, and China are planning on teaming up in terms of like their retaliation efforts or whatever against the United States. So, that's already happening. And that's, where I would say that's also where some of the longer lasting damage that could be completely not repairable comes into play. When your trading partner for centuries doesn't dialogue with you but instead threatens you, we start looking for other options, as bad as they may be. Yeah, for sure. Yeah, I also really, really wish that press conference was during market hours yesterday, not after the close. The after the close thing also made it extra tough. From Dennis, what you can do and what I did today is treat the intraday action independently from where we're going on the bigger picture. And there was plenty of intraday things were heavy, and I picked my spots for small-ish day trades that I'd take any day, and the approach worked great for me today. Yeah, it certainly can. I don't trade that way because I think that the bigger reward is in the bigger picture moves. So that's really what I'm always trying to position myself for. Every once in a while, in a market of a lot of uncertainty, and we're trading in a range, an equilibrium zone or something like that, then I'm just, pure single and doubles day trading. I remember doing that a little bit back in like October of 2024 when we were waiting on the election to actually occur, where you can always trade individual stocks that have earnings or news that trade independently of the market. I definitely get what you're saying, and I don't disagree with it. I would just say it's not really how I trade personally. I'm looking for the bigger moves and the bigger time frames. But that's also why it's just important for traders to know what their edge is in the market, what works best for them, and for them to focus on it. Appreciate the commentary there, Dennis. Looks like I got through everything for the moment in the VTF. A lot of chatter over here in the YouTube, so let me check out what's going on. From Michael B, my favorite little growth stock, MVST, is holding in decent. Okay. It is. There's a few names like that are holding in. And going concern off the table. Tariff resistance. Asia customer market, not USA. Price target is 10 for MVST. Okay, cool. From Apex Joy, do you think First Solar looks good? Does anyone know why First Solar was green today? What did I miss on this? There must have been news. It looks great. Do I think it looks good? I think it looks great. I mean, it's been in this nasty downtrend, but holy relative strength. Broke this descending channel to the upside, broke resistance, huge volume on it, relative strength. I think that there might have been news I missed, but yeah, it looks good. If you had to be long a stock, there's not many that look as good as this in the short run. From Gabriel, I came to say that your 15-minute rule on swing long saved me today. I was down like 3 to 4 risk on CRK today. I ended up selling into the close up 0.5 because of that rule. Nat Gas did have relative strength today. Awesome. I'm really glad to hear that. Yeah, really glad to hear that. Nat Gas related stocks are strong today. Nat Gas closed off highs but finished green. Not a lot out there that finished green. But in these names probably held in a little bit better because of it. All good, Gabriel. From Liam, I saw a piece of data that shows the percentage that these countries are tariffing is when you aggregate everything, and China's overall rate was 2.2%. Where the 67% came from, I don't know. How 34% is fair, I don't know. Also, China was on the high side of those percentages. Sure, so on the numbers themselves that they came up with, these tariff numbers themselves, it seems to be that they're not at all based in the reality of what those countries are actually tariffing us. There is this guy, and it's getting spread out a little bit, who basically, I guess, did the backwards math on how the tariff rates were computed. I actually have the blurb here in front of me. Let me see here. Where was it? Did I just lose it? Hold on. Give me one quick second so I can find this for you, and I can tell you how it appears that those numbers were calculated. Trump open negotiations from CNBC. Boom. Are we moving up on that? Okay. Got it here. I'm reading a tweet from James Surowiecki that was posted. Trump says, I haven't checked my 401k. Is that a real quote? Asked about markets, says, now we let it settle in. Great. But he's open to negotiation. All right, so this is a tweet from James Surowiecki that's getting a lot of movement. That says they didn't actually calculate tariff rates plus non-tariff barriers as they say that they did. Instead, for every country, they just took our trade deficit with that country and divided it by the country's exports to us. So as an example, we have a $17.9 billion trade deficit with Indonesia. Its exports to the U.S. are $28 billion. 17.9 divided by 28 equals 64%, which Trump claims is the tariff rate Indonesia charges us. So those numbers are kind of just made up, basically, and that's the formula in which whatever brilliant economists at the Trump administration came up with these numbers used, it seems. And I haven't personally fact-checked every single one, but I have now seen multiple examples of the EU and Indonesia and a whole ton of countries where that's how they came up with the number, and the math seems to line up. And then on top of that, the numbers that the administration used specifically are only for goods tariffs and don't calculate in the fact that the United States typically has a services what's the word that I'm looking for? We export more services surplus. Exactly. Thank you, Pete. Um, so they didn't calculate in the fact that there is a services surplus, and they basically just, it seems so insane to me, um, just divided the trade deficit number with their exports to us to come up with a percentage, and then we cut that number in half on what we're gonna tariff them. So, and again, does not include the service. Look, we're a services economy. Like, I mean, we're a services economy. That's how. If you go back to basic international economics 101 on why tariffs are just bad for everyone, it's because countries and economies should focus on what they have a strategic advantage to produce. The United States, as an example, does not have a strategic advantage in labor. Okay, labor in the United States is very expensive compared to labor in Vietnam or China or India. So producing something, generally speaking, that's labor intensive is best off being done by those countries, and then the United States can focus on what it's best at. And what it has always been best at is basically things that are services related, that are honestly like higher intellectual property type of goods, even though they're not actually goods, they're services. And we have a surplus there. So I mean, these numbers are just they're just nonsensical, really. It's it's great. It's like the craziest thing I've ever seen. But I don't know. Hopefully this whole thing is a negotiating tactic. I'm just really trying to be positive. When I post one of my worst days in my career, I got no choice but to be positive. I think it's an important thing to do. So yeah, I mean, that's it. But anyway, thank you for the commentary. That's how they kind of came up with it, from my understanding. From Gabriel, also gap down and forced selling tomorrow sets up an oversold bounce. Yeah, I would love for us to be able to bounce tomorrow. I think it's going to be heavily dependent on the employment number. I think there's a much, much, much higher probability of a bounce as we get into early next week. I kind of think, especially as we've just seen this headline, that Trump isn't open to negotiations, even though he hasn't checked his 401k. Probably doesn't need to anymore because of Trump coin. But there's a good chance that some of that happens over the weekend, where then that sets us up early next week for a bounce off negotiations. So we'll see. Gabriel on some important levels for the Qs. So Qs 448 important level, isn't that basically today's low? 449 stays low. You have a pivot point from September 2024 into 448. So yeah, there's some support there, I guess, off that pivot. SPY's 536, which is also basically where we closed. I don't see necessarily the importance of 536 in the same way. Maybe a little bit of an inflection area back last summer. Yeah, Micron was one of the worst. I brought that one up already. Broke through this huge range that it's been in for a long time. DJT, this is back in the VTF. DJT was green today, but that's because they refuted. It got smoked a day or two ago because they said that there was going to be a secondary offering, and today they refuted and said that there is going to be no secondary offering. So I think that helped that stock out today. Back over to the YouTube from Scott. It seems like layoffs are picking up based off of what I'm seeing via news, LinkedIn, individual reports. Yeah, exactly. Layoffs are picking up, and we haven't really seen. I don't even think we're going to see it in tomorrow's numbers, but soon we're going to be seeing the pickup in unemployment that is related to the government layoffs. There was like a challenger number out, which I don't normally pay attention to, that mentioned like 290,000 jobs or whatever lost at the government beginning to show up. That's the first time I've seen that. Gabriel saying Trump has a large ego, but he will eventually cave if other countries start taking their tariffs out. Yeah, for sure. I totally agree. I do think, you know, maybe we see some escalation, but I want to think that for the most part we are at maximum pain on the numbers that we saw yesterday and the market's reaction to it. Though there could still be some forced deleveraging from the big funds that are out there that could keep this market heavy for a bit. From Mike, when's a good setup to buy the dip and wait for a relief rally bounce? I mean, into this degree of extension, that's when I like to do it. Yeah, you know, this degree of downside extension is when I like to look for those opportunities. So at this point, I don't know, trade back through today's low tomorrow is a potential trade for that. I mean, tomorrow is just tricky because, again, the employment number and the fact that it's a Friday is tricky. If this was like a Tuesday and there was going to be no number tomorrow, I would have more confidence in like really beginning to look for that bounce setup. But we got to see how this employment number goes tomorrow. From Plasma Lab, 50% of publicly held federal debt is due to be refinanced in the next 2 years. A recession is likely part of the plan, in my opinion, and complete reset. Yeah, I mean, that's what Charlie McGallagher said from Charlie McGallagher said, like, I feel like in February, I don't remember when he first said it, but I feel like he was saying it maybe in February when the market was still at highs, that part of the plan was basically to create a recession in order to create a reset for the market, and that's what it seems like it is happening. The goal of that would be to wean the economy off of government spending and reinvigorate the private sector, and then if you have, as a result of a recession, you can lower interest rates. So that's good for the refinancing of debt, and it's also good for, you know, the housing market and things like that. So, you know, that seems to be very, very much the plan. It's an extremely risky plan. If it works out, it's not impossible for it to work out well, you know, and us to be more focused on a private economy and less focused on debt spending in the United States. It's not impossible for that to work out well, but, you know, where I would be concerned would be if we're doing all of this just to cut corporate income taxes or taxes on the wealthy to very low rates, in which case we still maintain a gross deficit, but now all of these park rangers and stuff have lost their jobs and things like that. I don't see how that works. So, you know, I don't know. I'm not privy to the plan. So I do like the idea of trying to stay positive, though. As crazy as a lot of this seems today, and as upsetting as it is to me on the way that those tariff numbers were derived and how they kind of came up with, there is still some degree of a thought process on people working in the methods that are supposed to be best for them. And I struggle to see how specifically crashing the entirety of the economy is actually good for Trump. Outside of, like what you're saying, is trying to do that short-term pain for longer-term gain. But how bad does that pain have to be? And why are you making it unnecessarily bad, like with the announcement yesterday? I mean, that just seems insane. Yeah, apparently Trump's opening to the Penguins, right? Also thoughts on China getting the money rotation from the U.S. QE happening there, and stocks held great. Alibaba first touch of the 50 after a stage 2 breakout. Yeah, Alibaba held in great, all things considered. I'm long. I'm glad to say it's one of my bigger long positions. So I still didn't really make anything in it today, but it wasn't as much of a drag on my P&L as other things were. That 130 is huge, and we got well below it. Could have been a breakaway gap to the downside, and we closed almost at it. And yeah, I mean, the general thought process, and there's a lot of data to show this, is that you want to be long markets and economies that are engaging in quantitative easing and spending, and you want to be short or at least not own markets that are engaging in austerity. I had shown in a somewhat recent afternoon meeting the FEZ chart, and that the problem with Europe for a decade was that they were engaging in austerity measures that stemmed from the European debt crisis back in 2010 and 2011. So if you look at this FEZ, during all this austerity, it did nothing for 10 years, and now all of a sudden the European government is being forced, really by us, to spend money in a way that they haven't previously. And guess what? Europe's outperforming, and it's breaking out. And China is doing the same thing. On top of that, I still think that these Chinese stocks are stupid cheap. And if the entirety of the global economy slows down, then the Chinese economy will slow down as well. But all signals point to the Chinese government. They could devalue the yuan if they needed to, and they can stimulate as they need to help hold things up through the tougher times. Alibaba is my favorite name of the Chinese stocks to be long right now. I generally only like to be long what I call the Chinese majors. I don't like the smaller little companies. Like I know Sami Abu Saad has some positions in some of the smaller little companies. They just make me nervous just because you never know what's going to happen with them. I mean, does anyone remember when EDU, this is a real gap, this is not a stock split, EDU gapped from $176 to $17 overnight because the Chinese government decided that this company can't operate in the way that they always have traditionally. That scares me. But when you look at like a e-commerce type company like an Alibaba, like a JD, or you look at a Baidu that's a little more akin to a Google, those are really my favorite names to be involved in, because I really don't think that they're subject to that kind of same accounting fraud risk that like what happened with Luckin Coffee, or necessarily not to say that there aren't government risks to Alibaba. There certainly are. We saw what happened when Jack Ma ran his mouth that time and pissed off the government, and they just wrecked the stock for a long period of time. The government did as a result of that. But it wasn't like a gap down like I just showed in EDU, or the move lower that happened in Luckin Coffee related to the accounting scandal that happened there. That was back in 2020. It was really bad. It was like 100. I don't know. It was an expensive stock, and it gapped down to like 3. All of them have lackluster growth. I mean, they're growing. They trade in like a 13 forward PE or something while growing and have massive buybacks. PDD is not a pure China play. It's just one thing to remember. It's not a pure China play, because a lot of PDD is Temu. And Temu is, for all intents and purposes, a U.S. company, or U.S. business. It's a Chinese company, but a U.S. business. And that business is on, competing with Amazon on super, super, super cheap goods coming from China. Sometimes they're low quality, but there is regulatory risk on this stock because of that. So PDD is not one that I like to really go after. All right. Yeah. I mean, there were a lot of really, really big CEOs at his inauguration, right? I mean, what are their stocks been doing? Meta, Amazon, not so great. McDonald's safety play looks great. How did XLP itself do? Yeah, flattish. What did Procter & Gamble do? Gapped up but sold down. All right, we managed to keep this afternoon meeting civil, which is cool. It's so hard. I really, 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 really don't like talk politics. I really want to keep it focused on things that can make us money, but it's so hard right now to keep it in just 100% focused on what makes money, when what is moving the market is entirely based on policy. And I can't help but look at those tariff numbers, as we just explained how they were just created, and just say that. I mean, it just seems like an objective truth, an objective fact that it's total nonsense how they made those numbers up. So, you know, it's just really tough, but it's important for us to all continue to just focus on how we can actually make money, focus on how things specifically impact the market, do our very, very, very best to leave any political opinion to the side because it doesn't benefit what we do here. Save those conversations for the Thanksgiving dinner table with your family when you want to, you know, separate yourself from relatives that you don't like. So on that note, appreciate you guys. Have a fantastic night. I'll see you all tomorrow.